Hello everyone, I'm Kunal Sodhani from Global Trading Center Shinhan Bank India, and we are here to understand and decode what is happening on the global side as well as understanding domestic trends and just understanding what's exactly happening with dollar rupee pair. So first of all, if we talk about the global headwinds, I think the tariff story still continues. But there are too many ifs and buts again coming into picture as expected, where Trump now says that possibly there can be the reduction in tariffs from China, as in towards China, to be precise. So I think that is giving some breather, to the cool off which happened to the dollar index. Now it is slightly bouncing back towards the 100 mark. While if you talk about the Brent crude prices, they are consolidating around 67 to $68 per barrel. Gold definitely has been getting a push at interims, and it did cross $3,400 per barrel as well. And we expect gold to be still one of the favorite asset classes to continue to remain for the entire year. While if we talk about what's happening on the INR front, we have been seeing volatile sessions at times where we have seen it dollar rupee moving below 85 also, but bouncing back towards 85 half, 85.60 levels at the current juncture. So what do we expect for dollar rupee? We expect that 84.90 continues to hold as a very important support. While if we talk about the resistance levels, 85.80 acts as an immediate resistance, followed by the 86.2025 zone, which can be an open area where I think exporters may once again bounce in to hedge some of their exposures. But the exciting part is dollar index, because if we see dollar index, it did break 98 mark. The low it made was 97.92, and then it bounced back towards 99.60 plus levels. So once again, it's the approachment of 100 mark, which will be a psychological number which needs to be tested, because if that breaks, then I think euro pound may cool off slightly, because we have seen euro dollar moving above 1.1550 levels as well. So I think those are very crucial levels to understand. We recently obviously made the highs in euro INR pair also. So for the exporters who are having exposure in euro or pound, I think these are very decent levels for them to hedge their exposure. At least I think 40 to 50% can be hedged around these levels. While for dollar rupee, I think good levels for importers, I would say there are been interim chances between 85, 85 half. I think these are decent levels to pick up for their imports, at least for the next 3 months. And as we discussed the range for dollar rupee, the second thing which we want to talk about is how the 10-year US Treasury yields have been moving. They did go sub 4. After that, they have started bouncing back after the tariff wars once again into the picture. So 4.34, 4.35 is where the base of the US Treasury yields are happening. There have been buzz that by Donald Trump, where we were expecting some comments which came from Trump stating that the rate cuts have to be much faster or sooner by Jerome Powell, otherwise he may also be fired. But I think those are more mere comments. I don't think that's the case in reality, which is also giving a cool off towards the dollar index bouncing back on the right side. So overall, I think the trend remains buy on dips for dollar rupee pair. Particularly, we see some kind of bouncing dollar index coming into picture with the base acting as 97.90, and once again we can test 100 and 101 levels. So that's all from our side, friends. Thank you so much for your time. Hope you found our video insightful. Thank you.